Welcome, team. This is another SPX Daily Plan that we do twice a week here on X and YouTube. We are together with Doc. Before I pass it on to you, Doc, as always, I'm going to run our disclaimer for a few seconds. And then, guys, feel free to send us any comments or questions within the chat. All right, Doc, take it away.
Okay, good morning. Let me get back to my screen. Good morning, everybody. And here we're going to do the daily plan that I write every day. Hold on, I just lost my window. Okay, that I write every day. Disclaimer: I'm not a techie at all, so don't be surprised if I have some technical glitches. So for the SPX for today, the biggest item that we have to note is someone that we call the IC whale. Other people have different names for him. And this is somebody that sells iron condors. So he sells calls above the above where the market is and puts below where the market is, and to harvest the premium. And roughly he sells 5 wide call credit spreads and put credit spreads for about a third the width of the spread. So for about $1.50 to $1.65. If he loses, like he does yesterday, he just doubles up. So now he's at about 34,000 contracts up here and down here. Long story short, we're not supposed to break through either of those levels. And so the default for today is that we chop around in the zone. Other than these two big features, the only other major feature that I noticed, just looking at the option chain, caveman style, the way we used to do it when we didn't have all this fancy software, was 60-90. There was around 1,000 calls and puts, I think, around 60-90, which to my eye becomes a possible magnet to the upside. My guess is that maybe somebody, and the stall point, that somebody sold a straddle yesterday at around that level. I don't know. This is just a guess. And so I'm going to, mentally say, okay, that's kind of where we go. And then we have the battle line at 6,100 round psychological number if we go up. And then if we can kind of break through that, which we did yesterday by 85 cents or something before we got slammed back down. Well, not slammed, before we reverted back down. Then grind toward this level where the market makers are long a ton of gamma. I'm going to assume that people here know what that means. Otherwise, you probably wouldn't be listening to this podcast, whatever we want to call this. And so that means market makers hedge in the opposite direction of the move. So as we go up, they keep selling. But as we go down, then they buy back their short hedges and we go back up. So it becomes sticky, mean reverting, grinding in that area. Time of day matters. Gamma is time dependent and spot dependent. What do I mean by that? It means the closer we are to the expiration of those options, the stronger the gamma influence, and the closer we are in time. So time and distance from spot, and the decay of those options were roughly called charm. So the charm effect of the decay of those options gets stronger and stronger as we get toward the end of the day. And so if we're if we're up here at the end of the day, and these options are, let's go say, a 50 delta or a 40 delta, with it, at, let's just say, for the sake of exaggerating, at 5 minutes before the close, there are 40 delta. At the close, if we're at 6109, there is 0 delta. So the delta collapses quickly, and so any hedges related to these levels get slammed closed in one direction or another. And the same thing with the if we're on the put side. However, if we should be over this level, over that long strike, the 6115, we could go up toward this area and then get attracted back down to that 6015 at the end of the day. And that's what happened yesterday. The iron condor whale, he lost yesterday, and his long strike was 6080. And we kind of went above it, and we closed at 6086. We kind of got attracted back down toward that level. The same thing could happen on the bottom. And so I'm expecting a choppy, range compressed day with that much, long gamma supply, but with the caveat that if we break either of these levels, there could be kind of crazy big moves. And again, like I said, time of day matters. Switching gears for a second here. So I noticed a little headline across the tape about Hynek's CapEx spending. They project CapEx spending to be less, and so it kind of spilled over into the semis. Nvidia's pulling back. Let's see who else. I think AMAT, because they're a producer. Applied Materials pulling back. Look at that. Okay, so now we have this, this kind of reversion trade. Where do they go? Now, word about what happened yesterday, a lot of these names got squeezed. Headline news from Trump about the infrastructure bill and all that, and we overshot. They got squeezed. Real typical, we overshoot like that, and we get a squeeze, we come back in. Very typical price action. AMD, probably similar. I didn't look at AMD. And so so a lot of these names kind of broke through these squeezy levels, and now we're pulling back, so we got to wait and see. On the potentially bullish side, I'm sure most of you have heard of Apple. Apple had a series of downgrades like last week, and it, kind of, gapped down and crapped all the way down to 220, where it found some buyers. And now Bank of America decided to make it its best idea. And so now up goes Apple, there goes some support for the market. So yeah, downgrade, underperform. Oh God, the lemmings follow off the cliff. Upgrade, best idea, the lemmings follow again. Where is it going to go? I have no idea. I'm just following price. Let's see what else we got going on here. Okay, let's run through the indices real quick. Let's take a look at, so Dell was one of the names highlighted in the infrastructure bill thing. And so same thing, it broke 120, the 1D max, the core resistance, and now it's sucked all the way back in. I'm guessing same thing happened with Oracle. I didn't look. That was another name that was mentioned. Oracle not sucked back in as much. Oracle broke 190. I had a call butterfly and I tried to sell it, but prices jumped around so much that I couldn't get the fill I was looking for. I have like an 85, 210, forget what the top strike is, Oracle call butterfly for January 26, long time. So that's Oracle. Let's take a look at the Qs. Like everything else, pulled back. 530 is our key level to watch. Like everything else, we overcut and pulled back. IWM, yesterday was Mag 7 day, so once again we had the, we'll call it rotation, dispersion, whatever we want to call it, where breadth was, I didn't look at breadth closely, but I'm going to say breadth was neutral to negative, with the Mag 7 doing the main driving, and with everything else giving it up. So now we'll see what IWM does. Again, lots of resistance here in IWM. Still mostly put dominated. Rounding out the Mag 7 parade, Meta, which is kind of moving independent of this whole Trump AI infrastructure deal, is kind of grinding up to its level. Microsoft managing to hang on to its gains. And so just looking here, we have a mixed enough picture here in the big names to say that, you know, it looks, again, the big names control the index, so grindy, grindy, choppy kind of action. There's no big red flag here that I can see. What's Tesla doing? Kind of hanging in its recent range. You know, if we kind of zoom out, we've been bouncing around this 400-ish, you know, this 30-point range, 10% range. So Tesla's back to being the Tesla of old, where 5% move in a day is, okay, I guess par for the course for Tesla. Almost like if it's in the middle there, you could buy a put or a call. Either way, you're right. Okay, let's look at VIX. So we had VIX expiration yesterday, and 15 was a key level. We kind of undercut and reclaimed it. So now positions are, you know, a lot of positions were rolled, rebuilt in the March OPEX, some in April. February is pretty much filled out. I didn't see a lot of action there. And so now we got to kind of wait to see what's happening with VIX. There's been some talk in our Discord, in our community, about when or if to put on some kind of VIX hedges and how to structure it. Long story short, I started, and I like some kind of ratio of butterflies out into March, maybe April. I already have VIX for February. Long, maybe 14-ish. Short, maybe 20, 22, 25 times 3, and then long something on top if you want for margin. I tend to leave that open a little bit with ratios, not flies. And I also sold 16 strike VIX puts for this expiration for about close to $2 or $1.75. So I'm saying VIX is going to be, let's just say I got $1.50. I got more. I'm saying VIX is going to be over 14.5 in March. I did it for March. March tends to be a crappy month. Not investment advice. I'm a trader. I'm just talking to you guys, one trader to another. That's all this is. Let's see. Okay, TLT. I'm not a macro bro, but I know enough about this to know that the whole rates picture is partially driving the bus, and TLT seems to be stalling. It's kind of near all-time lows. So the default is that it should go up. We have the FOMC coming up next week on the 29th. And so that's a potential, we could be in a holding pattern here. So until coming up, we have FOMC, we have GDP, and we have PCE coming up next week, 3 days in a row, the 29th, the 30th, and the 31st. And so let me switch gears. And so let's take a quick look at the term structure. Let's just see what the options market is pricing in for these events. Let's look at the term structure. And where are we today? And we see the term structure has come down. Volatility is settling down, which we know. We have these little spikes here for the events. We have cheap vol over here the next day or two into Friday, Monday. Monday is always cheap vol. So if you like to set up a calendar or do something, buying this cheap vol and selling more expensive vol, that's one trade that a lot of traders sometimes do. I do it occasionally. I'm more a 1 DTE, 0 DTE trader, or longer term swings. I don't play this game, but once in a while I do. It might be a game worth playing or looking at. But we see basically a normal term structure. A normal term structure. And we see the risk reversal skew is getting bid a little bit. There's some demand for puts coming in again. So this is the difference between 25 delta calls and puts. And there was some evidence of put buying. They're buying tails. It's wingy, so to speak. And we looked at this on Tuesday. Let's see how it looks today. I don't see the March expiration here. Here's all expiry. So we're kind of call dominated with not much below us until below 6,000. Now remember, as we go down, the gamma in these puts increases, the red will get bigger and the green will decrease. But generally when the boat is this tilted in one direction, it tends to stay a little tilted in this direction and then reverse, which is something I've been waiting for, not patiently enough apparently. Where's IWM? With IWM. IWM is kind of right in the middle here. And so if we look at the different expiry, so we got some bullish sentiment the next few days, swing trades, whatever, but we can't seem to get over this level. We kind of get over it and we get slammed back. And if we look out in time, there's still put domination till 230. So really needs to get over this 230-ish level for it to get moving. And you can look at the options matrix and see, negative gamma, but we have some positive delta exposure, so it's a mixed picture. Oh, that's what I wanted to look at. My presentations are not going to be overly structured. That's who I am. So, yes, okay. So you want to look at the deltas. And yeah, so you see deltas are basically flat. No real edge, maybe a little bit of delta exposure, but it's kind of like that nobody knows picture. Now, I wanted to look at this. We have a new feature, and Fabio could talk about it. And this kind of updates the levels. So levels are run at whatever time the hamsters run on the hamster wheel back in the okay, here we go. So if you looked on the dashboard before or on the chart, you didn't see the iron condor whale. But now with the update, here's the here's the whale. Copy image. Let me get ready to tweet that. I'm going to tweet it real quick. 1 second. I see whale.
And Doc, in the meantime, I can show basically when the intraday snapshot updates.
Oh, good. Good. Please do.
Yeah, as you can see from here, we have 9 updates throughout the day. So we start from our pre-market 7:45 Eastern snapshot. That would capture the updated open interest coming into the close. So when the data is published during the morning. And then obviously we start at 9:35. We give the 5 minutes for the market to open. Then we take the first snapshot, and then we take a snapshot every hour until 2 p.m., where we do have 3 snapshots in a matter of an hour and a half, so that we can capture kind of like the closing session. And this is also very helpful for, especially now that we're getting into earnings, where you're going to be able to understand market positioning at the close ahead of like tech earnings or earnings and so on. So you guys, yeah.
Quick question, because I haven't really been following this that closely. You guys have so many updates, I can't keep up with them. You guys are working. You're working harder than I can keep up with. So the question is, the updates. Let's say the 1:30 update, whatever. I'm just randomly picking one. Is that including intraday volume in some sort of way, or is it using the update of the gamma based on the open interest that was there at the open, which we know tends to be sticky throughout the day?
Well, yeah, the models that we use encompass different variables, so not just open interest, and we also have the volume data here. So you can also access the volume at that specific snapshot. So if you want to see, for example,
right, there's no volume available now because the market's closed.
Yeah,
right. Okay, you go back in time, right?
So if you want to see, for example, the volume, in this case at 3:30, you have the volume right there, and then you can go back in time. This is looking at 0 DTEs options. In the case of NVIDIA, we are looking at the next weekly. In the case of SPX, QQQ, we will be looking at the 0 DTE option. So here we can go back. You can see the timestamp right here. We can go back in time, see how things have changed. And then also one interesting part is also the JAX difference. So very useful. At any snapshot, you can see the change in gamma compared to the beginning of the day. So in this case, we are looking at yesterday's 3:30 snapshot versus the pre-market snapshot. But you can also do the delta around different snapshots. So as we say, we provide the data every hour. So here you can see the difference in gamma from 2:30 to 3:30, or the difference in gamma going back.
So show us where the actual difference is. Like, what was it before versus here?
So here you see, this is just the difference. So here you see there's an increase in positive gamma for about almost 2 million at this level, 145,
147, whatever it is. Okay, 145, right?
146, and then this would be a decrease in negative gamma at this level by 1 million. And then what you also have is, because maybe you want to understand what's going on, we also have our liquidity summary here. So the liquidity summary will tell you exactly what has happened since the open. So since the open, in this case, we are looking at the 330 snapshot, but we can also go back in time right here.
And so you see the top 5 strikes in volume, for example.
Yeah.
And that kind of helps us see what's being targeted. And we saw the 145 NVIDIA call yesterday, and one has to assume, at least I'm going to assume, that that's being bought. People aren't selling at the money NVIDIA calls for Friday. Maybe they are, but I don't think so. Of course, a lot of that's trading back and forth, and we can't know that. And that's kind of what helped bring NVIDIA up. And then we had like the higher strikes where the gamma decreased, and that's kind of, we didn't breach up to 150. We kind of stalled in the middle of that range.
Yeah, and here you can also see basically the top gamma strike change. So we saw, for example, a 185% increase in the 146 level, 1% increase in the 145, and so on. So you can see basically if, for example, our high vol level, which is the gamma flip, has been changing throughout the day, or it has been stable throughout the day, or has been, do we see a spike? Is the high vol level gone up or down throughout the day? And then also you can then go and get the data and plot them into the chart by taking the levels and going into your trading view.
Okay, thanks for that overview.
Yeah.
See, folks, I learned something. Like I said, there's been so many updates, and I kind of use some of the main tools that I always have been using for a long time, and so I haven't taken advantage of all this stuff. And plus, I do a lot of intraday trades, scalping and selling premium and buying call, debit spreads, or puts in between within the day's action. So I often don't have time, or don't make the time. I always have the time. Don't make the time to go and take advantage of these features. But that's why it takes a village. It's a community, so people will point out, hey, what about this? What about that? And if you're kind of, watching the comments that are going on in the different channels on the Discord, then, depending on what your flavor is, if you're an intraday trader, swing trader, more long-term positional trader, you have all those variables available.
Yeah. And I think the important part is that yesterday we talked about integration. So all these levels are going to be updated on all the platform. They will also be updated automatically in TradingView. This is coming very soon. But if you guys use any of the other tools like NinjaTrader, Quantower, Atas, this will be automatically updated via API every morning. So nothing to do there.
So you won't have to copy and paste all the time.
Exactly. Yeah, that's the goal.
Okay, that's a good goal. Godspeed. Okay, so just taking a look at VIX. Oh, let's go. Now I'm curious, since I know we have this new toy. There we go. Audience, indulge me. Let's see what happened with VIX yesterday. Okay, so let's go here. I'm just gonna play with commands. What command would we want to use? Where's the DEX? Well, let's just take a look at this, see what it shows us. Okay, so 20s 18s. Yeah, 20s, you know, 20 tends to be what the institutions like to buy, 20, 25, call debit spreads out in time. And where's the put call ratio? Okay, nothing really much happened there. Now, Fabio, show us here. Tell me where the DEX would be on this.
For the DEX, we don't have that intraday.
You don't have it yet? You don't have it yet, okay.
Yeah, it's only JAX. So you have the ZLT and all expiration that you see there. You have the volume. Yeah, exactly.
Okay. All right. So, well, it was yesterday. Okay. So I was just trying to see where, if there was anything that I was missing. I was just kind of watching some of the big trades come in. And the difference we see, what was the difference? The 18 and 20 call levels. Institutions are buying the 18s and the 20s. And the 15, well, a lot of the 15 rolled off yesterday because that was the main put strike in the Jan expiration. And that kind of rolled off yesterday. And so now we're kind of having a reset in VIX. So now let's just go back to the main channel. And let's see where, okay, so yeah, so March is kind of March and April are sort of the main ones, and we see 20. So 20 is kind of, as we approach there, market makers are going to have to start buying more and more VX futures, which spills over into the index. And so, as they say, you know, buy insurance when you can, not when you must. That's all I'm going to say. And if we just kind of look at the swing model with the caveat that VIX doesn't trade like a normal security with support and resistance, classically thinking, we do know it mean reverts. And, you know, look where it is. And I think VIX can stay sticky around this level into February OPEX. Could go back up to 16, 17. I would expect 16 normal VIX. So, yeah. And that's it. Let's see. Do we have any questions or comments here? Surprisingly comment-free or question-free.
Yeah, let us know, guys, if you have any questions. So,
one other thing I want to mention, and again, it's in my daily plan. I don't know if I copied the whole thing, but I just like to call them the gurus, or some call them the furus, the financial gurus. Rubner, Nomura, Bank of America, blah, blah, blah. Hedging, there's a number of them. They're all over Twitter. They're pretty good. They certainly know more than me. Are talking about things like corporate buyback window opening, I think on the 24th. I think that's Friday. They're talking about 401k flows coming back in. They're talking about CTAs, trend following hedge funds and vol control funds that regulate their exposure based on volatility or implied volatility versus historic volatility, all kind of coming back into the market. And so even though we might logically say up 8 days in a row or whatever the number is, and overbought, blah, 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 overbought does not mean sell, doesn't mean we can't have a down day, Doesn't mean that this rally fails and we go back to the election gap, but it just means I'm just saying the trend is your friend. Most of us are traders. We've heard that for a million years. Maybe there's some truth to that. Any other questions or comments before I sign off and go look for some trade ideas for myself? Okay.
Thank you again, as always, Doc. And for those who are interested in learning more about all these things, we have everything available within our dashboard. All the models that you saw today from Doc, all the levels are part of our premium. So if you want to try it out, you can go on mentorq.com and try free for 7 days. And we're going to be back with Doc on Tuesday and Thursday next week. And also, Doc is always available within our Discord community. So thank you again, Doc, as always.
All right.
Amazing.
You're welcome. Take care, everybody.
Bye, guys.